Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, November 30th, 2020. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Before we move forward here, I do want to mention that I will be hosting the monthly market outlook tomorrow, which is Tuesday, December 1st, 2020 at 4 p.m. Central Time. 4 p.m. Central Time. I'll send out the Zoom link here shortly. Again, I will be hosting that monthly market outlook to talk about the markets here heading into the end of the year and also take a look at various candidates as well. I will also be announcing the upcoming schedule here for our next premium boot camp, which will be next week, in addition to our PivotBoss Masters live sessions that are coming up as well. So that will be announced tomorrow. So please join me at 4 p.m. Central on Tuesday afternoon, December 1st, 2020, for our monthly market outlook. All right, here's a look at the ES in the daily time frame. You'll see here that the ES is currently holding at highs. We had a couple of days here to finish out last week where we pretty much went nowhere, and right now we've tested both sides of the range. At the moment, the important key level to continue to watch here is the previous week's close price for the ES. Previous week's close is basically right there, and that is 36.37. For the NQ, it's at around 270s, 73.25. And so those two right there are going to be very, very important here early on. Right now, the ES has basically dropped away from the previous week's high and is now approaching the previous week's close from below. So that's going to be an early key level. If price cannot reestablish acceptance above 36.37 or 36.40 pretty soon, we may see a return back into the key level 35.87 below for a big test. Overall, this market continues to trend higher. You can see the bullish Pima trigger zone is still active and in effect. If price can get through 36.50, there's some clear air above, which can take us into some upside key range targets. Again, we have key range targets here at 37.81.5, and then we have a 100% target that takes us all the way to 39.76. That's based on the recent impulse sell-off. So big range here, and price currently sitting just above the key range high. Is it going to make a move for these upside targets, or do we fail at 35.87? A failure there would open up a return back to the middle of the range, and that would take us back toward 3400. All right, let's take a look here at the NQ. Now the NQ is currently holding at highs as well. This one has sat up here near these highs for a while. You can see that based on this key range right here, we have that key range high, the key range low is a little bit lower. And right in this zone here, the NQ has traded but has failed to find acceptance beyond that zone. Above the previous month's high, it's been holding and failing, and right now we're trading right at it. Right at it here, higher value relationship heading into next month's trading, and so far we have an ascending pattern here as this thing approaches the high. If price can find acceptance through the key range high, 12.465, it opens up the upside extensions above. First, you have the 12.917, followed by the major ones at 13.370 and the 4.270s. So again, big time upside potential here. 14.270 could be the ultimate upside target if this energy is released to the upside. Again, this is the zone here where a reaction will occur. It's either going to break and see a transitional phase to a markup phase here, or we're going to see a rejection and perhaps return back to the mid of this pattern, which is 11.560, perhaps even down to the bottom of the range, which would take us below 11K. So right now we are testing key range up here, key levels that are, again, continue to remain major resistance, but could break one way or another here very, very soon. So continue to watch that edge. All right, let's take a look here at crude oil. So right here, crude oil has had a significant rally. You see it started the month of November with a significant reaction to the LVN. We talked about any drop into 35. The 35 CLVN could be an opportunity to see a reaction. We saw a major bullish outside day, and that triggered our move back to 40 and across the range to 42. Now this market has built energy here and exploded through the 44s, You see the transition day here where the midpoint is right at 44. That is a significant breakout. We're now pulling back just a hair here. Failed new low developing today with an upward push. If this market can continue to find acceptance above 45s here, again, we have a shot to continue higher toward that upper zone here into 50 bucks. This market, again, transitioning through 44, opens up quite a bit more upside. We've been in this range, call it 35 to 44 for a while, and now we're breaking out, and the next zone above takes us as high as 55. So if the market's going to stay above these 44s, we have this entire range that could be traded here over the course of the next couple of months. So again, very important zone here. Failure to hold 44 could rotate this thing all the way back down toward these recent lows below 35. All right, let's take a look now at gold futures. Gold right now has been in steady sell-off mode. As you recall here, I mentioned that this was a great short-term buying opportunity for a 1907 test. Over here, I doubled down and mentioned that this was a great opportunity as well. And then the very next day, we couldn't do it. We tested off that mid, but we closed at or below that level. The next day, it flushed a bit more. We talked about bulls coming in to defend 1860, but how those bulls haven't been getting paid, and at some moment we may see a long liquidation. There it is. We talked about a move at least to 1800, and how if price gets below the 200-day, it may begin to offer an opportunity to trap for another rotation back up toward 1875. So will we have a 100-point bounce here? We're at 1770 right now. We could see a 1875 bounce. The midpoint of this current month's range could be in play. That's currently 1866.70, but dropping with each new low today. So again, this market right now may be primed for a bounce at some point, but we need to see signs of rejection first. We're not seeing that at all. So what I mean here is that we get this drop here. We're below the 200 like back here. Are we going to see a bit of a reaction? We need to see some sort of reactionary buy here that develops some sort of tail or some sort of rejection that could get us bouncing back up. If not, then we have the bottom of the next key range here, or the next market structure level, which is 1657. So that's what's at stake here. If this thing doesn't find a bounce here and can't get back above 1800 soon, then we're dropping down to the next key level below. That's 1650. So right now, very important here. We'll see how this plays out. If no bounce occurs, we may be headed much lower. All right, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.